Hello everyone, welcome to my channel. Today I am going to share with you my analysis on crypto and my strategy either to invest or not to invest in the asset class. Bitcoin has recently achieved a significant milestone by reaching a price of $37,000. This achievement is remarkable as it marks the highest value for Bitcoin that has seen in over a year. To understand the significance of this rally, we need to look back to the events of the past year, particularly how the actions of the Federal Reserve impacted the entire cryptocurrency world. In 2022, the Fed decided to raise interest rates. This had a domino effect on the cryptocurrency market, triggering a series of unfortunate events. Many of the largest cryptocurrency companies faced severe financial troubles and in some cases even went bankrupt. Among these companies, Bitcoin, the most renowned cryptocurrency, saw a substantial decrease in its value. It lost an unbelievable 73% of its worth, dropping from its peak of $64,000 to a mere $17,000. For many observers, this drop in value was more than just a decline in Bitcoin's fortune. It appeared to signal the end of Bitcoin and by extension the entire cryptocurrency kingdom. This miserable period in the cryptocurrency world was get worse by the prosecution of a key figure, Sam Bankman-Fried, also known as SPF. His legal issues acted as the final nail in the coffin, further damaging the already fragile state of the cryptocurrency market. The consequences of this crypto crisis were far-reaching. Countless individuals who believed in the potential of blockchain technology and cryptocurrencies had lost their hopes and they suffered significant financial losses. One of the most prominent casualties of this shaky period was FTX, a major player in the cryptocurrency arena. The collapse of the FTX served as a severe blow to confidence in the cryptocurrency industry. However, there is a silver lining to this story. Despite the numerous challenges and setbacks faced by the cryptocurrency market, it has demonstrated resilience and emerged from the storm. As of now, Bitcoin value has bounced back and stands at double the level it was in last year. This revival may signal that the crypto winter has passed and the cryptocurrency market is on the road to recovery. This brings us to the central question of this discussion. Why Bitcoin price is on the rise and will this upward trend continue? Should you consider investing in Bitcoin now? Or is this urge merely a short-lived bubble destined to burst in the near future? I am going to share my analysis and view to answer these questions comprehensively. We need to explore the underlying factors that influence the decision of major investors in the cryptocurrency market. By gaining insight into the thought process of these influential players, we can better understand the direction in which the crypto market is headed. So please stay with me until the end of this video and do consider pressing like and subscribe. It is important to recognize that when you invest in stock or cryptocurrency, you are not operating in isolation. In the same financial landscape, there exist massive institutional investors, just for example BlackRock and Warren Buffett, who possess significantly more financial resources than individual investors. Their financial clout is not limited to billions of dollars. Rather, they use trillions of dollars, enabling them to sway the market. This reality underscores the importance of looking at the market through a broader lens. It is insufficient to approach crypto investment with the mindset of a mere enthusiast. To make informed decisions, one must comprehend the factors that influence the ultra-large investors and think along the lines of these financial giants. Ultimately, the goal of any investment is not solely the satisfaction of witnessing the portfolio's value increase. What truly matters is the ability to convert these assets into tangible cash. Many investors may appear wealthy on the paper, with portfolio worth billions of dollars, but their wealth remains intangible if they cannot willingly transform it into a spendable cash. To grasp this concept, consider a scenario where a tech company is projected to earn $10 billion a decade from now. If inflation surges in the present, the future value of that $10 billion will be affected. While the nominal amount remains the same, the purchasing power of that sum reduces because of inflation. This highlights the sensitivity of future earnings to current condition. In response to the inflation, central banks often take measures to control the economy. One common approach is to raise interest rates, which has the dual effect of lowering spend and mitigating inflation. However, higher interest rates also translate to increased interest payments on government bonds. Let us break this down further with a simple scenario. Imagine you have two investment options, both offering identical returns. One is an investment in US government bonds, which are backed by the US government and guaranteed by US taxpayer. The government is committed to secure your investment and will do whatever it takes, such as raising taxes or even waging war, if necessary, to ensure that you receive your money back along with the promised interest. Other option is to invest in a company like Tesla. In such a scenario, choosing a government bonds would be a logical choice. Why? Because you stand to make the same amount of money as you would do with Tesla, but with the added security of a government guarantee. Opting for Tesla in this situation would be considered wise, as the company's future profitability is uncertain and its success is contingent on the government's willingness to allow its operations. The cryptocurrency market fortunes are fundamentally tied to the actions of the Federal Reserve and specifically its decision regarding interest rates. To illustrate this point, consider the history of cryptocurrency market before and after the Fed rate decisions. Prior to 2020, the cryptocurrency market experienced a period of stagnation and low growth. This boring performance can be attributed to the Fed's decision to maintain relatively high interest rates. However, in 2020, the Fed pivoted, lowering interest rates to near zero. This change in monetary policy had a profound impact on the cryptocurrency market, resulting in significant surge in 2021. The market sensitivity to Fed decision became apparent when rumors circulated that the Fed might once again rise interest rates. Even before any official action was taken, these speculations caused the cryptocurrency market to experience a downturn. The actual increase in interest rates by Fed when it eventually occurred led to broader collapse of Bitcoin along with entire cryptocurrency industry. However, this is not new to crypto. In fact, history provides another example in the form of Bitcoin price decline in 2018. This drop coincided with another instance of the Fed raising interest rates. These instances emphasizes the close correlation between interest rate and the performance of the cryptocurrency market. Understanding how interest rates impacts the market is an invaluable skill for investors. It enables them to anticipate which asset will rise and which will fall in value. This knowledge forms a key component to the curriculum at this channel. Viewers of this channel possess a unique perspective on investments. They approach stock and cryptocurrency with a deep understanding of the factors that drive market behavior. Whether dealing with stock or cryptocurrency, they are equipped to make informed decisions that takes into account for market dynamics. Now, let us dive into the primary question that this discussion aims to address. Why is Bitcoin price on the rise despite interest rates being above 5%? One way to predict the price of an asset, including Bitcoin, is to assess investors' expectation regarding that asset's future performance. Investors are primarily concerned with where an asset will be in the future rather than its current state. They aim to profit from future movements, as capitalizing on the present is often less lucrative due to missed opportunities. A recent development that has attracted significant attention and speculation in the cryptocurrency market in this series of filings submitted to the SEC requesting approval for various cryptocurrency exchange traded funds. These ETFs, if approved, have the potential to revolutionize how individuals invest in cryptocurrency. Currently, investors in cryptocurrency market face the challenge of predicting which specific cryptocurrency will experience growth. This approach will potentially profitable, carries a high degree of risk. If an investor places their bet on the wrong cryptocurrency, they could suffer substantial losses. The proposed cryptocurrency ETF would function as financial instruments managed by the institution. These ETFs would invest in a diverse range of stablecoins selected for their significant growth potential. By holding a share in such an ETF, an investor would effectively own a fraction of multiple stablecoins with promising outlooks. This diverse approach to investment would mitigate risk, as the fortune of one or more few coins would be balanced by the performance of the other within the ETF. In essence, investing in such ETF mirrors the strategy of investing in an index fund like the Nifty 50. By investing in these ETF, one gains exposure to the top 50 companies in India. This diversification is a safeguard against the impact of poor performance by a single company or a handful of companies within the index. The overall performance of the index is likely to remain stable or even grow due to the strength of the most of the included companies. In the case of proposed cryptocurrency ETF, the presence of multiple stablecoin in the portfolio would serve as a buffer against portfolio losses in individual coins. This diversification strategy, combined with the professional management of the ETF, is expected to minimize the risk of investors. An interesting aspect of the pending cryptocurrency ETF is the entities behind their filings. Notably, BlackRock and Fidelity, financial giants with trillions of dollars in the assets under management, have submitted applications. The involvement of these well-established institutions signals a significant interest in and commitment to the cryptocurrency market. It implies that these influential players are planning to contribute to the development and growth of the cryptocurrency sector. While the cryptocurrency market may not be becoming in the short term, the entry of such prominent players with vast financial resources suggests that there are substantial improvements on the horizon. This could be a promising turning point for the cryptocurrency market, even though not a clear guarantee of success. However, it is essential to recognize that the cryptocurrency market growth may be hampered as long as interest rates remain high. Elevated interest rates have the potential to hinder the growth of cryptocurrency market. In this scenario, it is unrealistic to anticipate Bitcoin reaching the sky high of $70, $80 or $100,000 in the near future. The most likely scenario in a high interest rate environment is a gradual and fluctuating increase or decrease in the Bitcoin's value. Investors should be prepared for periodic ups and downs in the market. The presence of major institutional players with deep pockets does not alter the fundamental impact of interest rates on the cryptocurrency market. In conclusion, it is crucial to underline that the information provided in the discussion should not be taken as financial advice. It serves as a foundation for understanding the dynamics of cryptocurrency market and impact of interest rates on digital asset value. What is strongly encouraged is the pursuit of knowledge and education in the field of investing. This channel is a valuable resource for those seeking to become well-informed investors. It equips my viewers with the knowledge and skills necessary to navigate the complexities of the financial world and make informed investment decisions. I will consider starting my investment in crypto ETF as soon as it will be available with the small amount in monthly SIP manner. My aim towards this investment is to become a diversified investor. This is not a buy or sell recommendation in any manner. Thank you for taking the time to engage with this information. The interest is to foster a better understanding of the forces at play in the cryptocurrency market and the broader financial landscape. Knowledge is the most potent tool an investor can possess, and it is through knowledge that individual can make prudent choices in this investment journey. I will see you soon with my next analysis, so stay tuned and do not forget to like, subscribe, share and comment your views. Thank you. Bye-bye.